This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And very good afternoon, everybody. Yes, across Bloomberg platforms, I'm Carol Massar along with Tim Stenivek, live here at Bloomberg headquarters in New York City. And we've got a little bit of a mixed market, some gains on the S&P 500 and the NASDAQ 100. We could get another record on the S&P. Treasuries are down, yields are up. We are seeing jobless claims in the United States hit the lowest since April. So that's underscoring some strength in the U.S. labor market. And Tim, you know what that means?
What?
Fed probably on hold.
Oh, okay. Well, speaking of the Fed, the president is heading there today to check out the construction site that he has criticized for cost overruns. If we do hear any commentary from the president related to that or anything else of note, we will bring it to you live.
Should be kind of interesting. Plus, the day after, what you need to know about Tesla and Alphabet. Ross Gerber back with us on Elon and EVs and so much more. And then well-known media internet analyst Laura Martin. She has followed this world for such a long time, really closely followed analyst. We're going to talk Alphabet. We're going to talk Apple. We're going to talk Amazon, Netflix, Meta, and more, maybe even some late night TV shows and what's going on.
If we have time, we're going to try to fit it all in. Also, the head of the second largest bank in Florida on Wall Street South with the CEO of City National Bank.
All right, first up, let's get to a check on today's trading. We've got Intel after the closing bell. Lots to come your way. Here is Charlie Powell.
Hi, thank you very much. And ahead of earnings, we got Intel right now down by 2.7%. The Dow lower, down 198 right now, way down by IBM. IBM after earnings down now by 7.6%. NASDAQ higher by 14. That is a gain of 0.2%. And right now we have got the S&P 500 index up 14. Again, to be clear, NASDAQ now up by 0.3%. Our Mag 7 index trading lower by 0.2%, being weighed down by Tesla. Drop there of 8.8% on Tesla. The 10-year, 4.39%. The 2-year, 3.91%. Gold down $17 the ounce, down by 0.5%. West Texas Intermediate crude up 0.5%. And Bitcoin up 1% right now, holding just above $119,000. After earnings, Alphabet up 1.5%. After earnings, Tesla now trading lower by 8.8%. Hulk Hogan, dead at the age of 71. He was an icon in professional wrestling who turned the sport into a massive business. Again, S&P at a record up 14, up by 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thanks so much. Well, President Trump, no stranger to touring construction sites as a real estate developer and investor. Well, today he tours the Fed's construction site that has been in the news a lot. The president criticized the Fed construction for cost overruns. All of this happening amid his escalating attacks on Fed Chair Jay Powell for not cutting interest rates.
We have a real terrible head of the Fed. He's a stiff. He's a knucklehead. He's hurting people that can't get houses because they don't have mortgages. And I don't know if he knows it or not. He's either evil or stupid, and either is really not acceptable. But he's not doing a good job. And but he's only going to be there for a short while.
All right, that was President Trump on Tuesday. He will be visiting the Federal Reserve. That's at 4 p.m. Wall Street time. We'll be monitoring and covering that for you. For more, though, on what might lay ahead as the president gets ready to visit the Fed, Bloomberg News managing editor for U.S. economic policy is Kate Davidson. She's in the Bloomberg D.C. News Bureau. Kate, why is the president going to the Fed?
Yeah, it's a good question. It's a pretty rare occurrence. A president hasn't visited the Fed building in many years. I think the last time that we're aware of is in 2006 when George Bush went over. And the reason is because the president and his allies have been raising a lot of criticism over this very costly renovation project that the Fed is undertaking. This is something that's been going on for a few years, and the costs have grown quite a bit. it. Inflation is a factor. Some changes to the initial design and higher cost estimates than they originally expected are factors. But the president and other administration officials have basically been saying this is way too extravagant. They want more information. So the Fed has been trying to share a lot more details. They've shared video on their website. They've put out an FAQ answering some basic questions. And in fact, this morning, one of our reporters was able to go over with some other members of the media for a tour of the site. And we just moved a story on that with some details about, some of the elements of the project that Chair Jerome Powell has said have changed. Some of the things Republicans are mad about, he said they're not even in the plans anymore. And a lot of this is essentially the message was some of this is really overblown.
Well, let's go there now. What did our Bloomberg News reporting team find? Paint the picture for us. Give us some color.
Sure. Well, they were escorted by Fed staff that pointed out some of the reasons why this project is so expensive. So the Eccles building, which is one of the main buildings that's being renovated along with another one, it's very old. It was built in the 1930s. It's never undergone a major renovation. And so one of the things that's so costly is security, bringing it up to security code standards that the Department of Homeland Security set. So essentially blast proofing the building and some other measures. Those are quite expensive. But they also pointed to a couple of elements that were in an original planning document that have seemed to rile up Republicans in particular, like a plan for a rooftop terrace garden. They said that rooftop seating has been eliminated. Some Republicans also pointed out that there's a plan for a VIP elevator. They said the elevator is actually just meant to accommodate disabled users of the elevator, and they showed them that. So in some sense, there was not a ton to see in the way of extravagant features. I think fountains were part of the original design. Those have been eliminated, the reporters were told. But it was very much a visit to an active construction site. There are hundreds of workers that come in and out of this area every single day.
Hey, so help me understand. So I'm assuming the U.S. taxpayer is paying for this, right? It's taxpayer funds that go to this. I mean, who approved all of this spending? And anybody who's done a renovation or construction knows you start with one thing and it kind of goes further. But I mean, how long has this been going on? When was it really approved? Like, what do we know in terms of kind of some of the back details?
Well, the question of the financing is a little bit tricky because, as most Americans might not know, the Fed, as an independent agency, is not funded through the appropriations process through Congress, and that's by design. It was meant to be to insulate them somewhat from political influence. So they collect fees from member banks, members of the Federal Reserve System, and then they also have this huge portfolio of assets. We write a lot in our wonky Fed coverage about the Fed balance sheet, which is something markets care about a lot. That they actually earn interest on the securities that they hold, and that is income, and they use that income to pay for their operating expenses. And so, money that they have left over beyond their operating expenses, if they have it, they send it to the Treasury. So taxpayers benefit in a sense from that when the Fed is earning a lot of money on its balance sheet. But the Fed has been recording operating losses, and that's slightly complicated reasons, but has a lot to do with higher interest rates. So that I think is also what has frustrated Republicans. We've heard Elon Musk talk about this, is that the Fed is spending a lot of money on this big project at a time where they're also recording operating losses. So, the project was approved back in 2017, 2018. It's been some years. And of course, since then, we've had inflation. That has also added to some of the costs here as well.
Yeah, we had a lot since then.
Help me understand to what extent the Federal Reserve Chair has control over this renovation. I mean, is he and has he, over the last few years, single-handedly been the one to make decisions about what goes where, what gets included, what doesn't get included, what construction materials? To me, that seems like the picture that the president is painting.
For sure. I mean, the chair, no doubt sets the direction and the tone, but this was definitely a project that was approved by the entire Board of Governors, the 7-member board. Of course, the folks who are on the board now are not all exactly the same as the people who originally approved the project. And when Jay Powell was a governor before he became the chairman in 2018, he was one of the governors that helps to oversee things like, the buildings and the facilities. And the Fed has control over its own buildings. building. So in essence, to the earlier question, I mean, they didn't need to seek approval from anybody per se, but the project has continued on, and we don't know exactly, okay, which decisions did Jay Powell make or approve, yes or no, but the broader decision of undertaking this huge project was one that was made by the whole board.
Hey, Kate, at the same time, cost overruns connected to government spending and projects, not a new thing in general, and I understand how you laid out kind of the Fed separate in terms of it being an independent body. Many would agree, though, anything to do with the government where there's cost overruns, at least should be looked at. And a lot of times it can be explained away. Are there nonpartisan observers who are watching this? What do they say?
For sure. I mean, yes, I think that it's it's probably viewed as a positive step that that Jay Powell has asked the Fed's IG, Inspector General, to just do a review of this. We've also seen the Fed in recent weeks post a lot more information on its own website. It seems like they were caught a bit off guard by all the attention that this has gotten and are trying to be more transparent and share more about it. There's clearly a lot of interest in this, and some of the explanations that have been provided for why there are cost overruns seem to make sense, but then in other ways there are perhaps things that they will have to explain to lawmakers and justify a little bit more than they're used to. All
right, great setup for us as we keep an eye on the president visiting the Federal Reserve at 4 p.m. Wall Street time. Kate, thank you so much. Bloomberg News Managing Editor for U.S. Economic Policy, Kate Davidson, there in D.C.
Well, speaking of the president denied he was seeking to ruin the business empire of his one-time ally, Elon Musk, as retribution for their dispute over the president's signature tax law. President Trump posted on social media earlier today that he wants Musk and all business in the U.S. to, quote, thrive, and that their success is good for the country. This, Carol, on a day when Tesla shares are just absolutely tanking. Elon Musk did warn of difficult times ahead for the company, and that it will be in a transition period for the next year.
That's right.
More.
The stock down about 9% as we speak. All right, Ross Gerber was here with us yesterday, getting us ready for Tesla earnings and on the day that they were reporting. He joins us again today to tie up the headlines from Elon's call last night with investors. He's a longtime investor in Tesla, an owner of Tesla cars. He's the president and CEO of Gerber, Kawasaki Wealth and Investment Management, and he has about $3.6 billion in assets under management. Ross, so glad you could give us a little bit more time today. So thank you. Just about 24 hours since Tesla earnings, not quite, but almost. We've had Elon's call with investors. What is or remains your investment thesis on Elon and Tesla? Because you seem to certainly have pulled back and are a lot more cautious.
Right. I think probably my biggest issue is that what I believe is best for Tesla isn't actually the strategy being employed by Elon. And what I think is best for Tesla is to be focused on selling great EVs that can drive themselves versus completely pivoting into this robot and robo-taxi business because they're struggling to sell cars. Because what we're seeing now, which I suspected to be true earlier, is that the deterioration of the EV business is really, really bad for Tesla, and it essentially is an EV business. And so hoping that robo-taxi and robotics is going to be a revenue stream and let alone profitable anytime soon is really just not going to happen. And so, as Elon said, Tesla's in for some pretty tough quarters ahead. And with the ending of the tax credits and all this kind of stuff, I mean, this is all bad news.
When you say it's not going to happen anytime soon, what do you mean by that? Give us your own timeline here.
Well, we follow Waymo very closely, and we think that Tesla's 2 years behind Waymo as far as the development of their robotaxi. And now Waymo is scaling and being quite successful at charging, the right amount for rides and generating enough revenue that it's meaningful. So I think it's at least 2 years, right? So where Tesla's at, for them to generate any revenue at all of meaningful ability will take a couple years. And then from a profitability standpoint, we don't even know if that business is going to be profitable with all of the competition that's coming into the robotaxi business.
So you said yesterday, you reminded us that you've been selling shares of Tesla. I think there were reports too in June that you sold about $60 million worth of Tesla shares, and you cited the waning confidence as you're laying out here in the company's future. Are you selling more? What's your exposure at this point?
Yeah, we still have On my last 13F, we had over 200,000 shares. Right now we're holding a little less than 200,000 shares. So we continue to sell the stock. We have a lot of diehard Tesla clients that you have huge gains because we bought the stock at, like $2. And so, people aren't that excited to pay taxes. And there's still this possibility that Elon could change course and really do the things necessary to fix Tesla, because fundamentally Tesla's a great company. Most, if not all, of Tesla's problems are self-created because of the CEO, Elon Musk. It's not that Tesla's core business has some big problem. It's actually the opposite. The CEO is the problem, which is super unique. So that's why I'm loath to just be like completely out of Tesla. But on the other side of the coin, with the valuation where it's at, and basically we think they're not going to be profitable next year, the stock needs to move meaningfully lower in my mind before I would buy it.
How low? What's meaningful?
Well, I don't know if any of the analyst estimates for next year are right. I think they're all vastly overstated. But even if you did $3 of earnings next year at 50 times earnings, which is NVIDIA's multiple, you'd be at $150. And then you put some premium on the Elon Musk robot premium. Maybe you put on $50, $100. So you're at, $200 to $250 a share is where I think Tesla should be.
Okay, $200 to $250 a share. Right now at $303 a share, down 8.8% today. Hey, Ross, in the past when we've spoken to you, you've been really critical of Tesla's board. You've been critical of it on social media as well. The board does include folks such as Kimball Musk. It includes James Murdoch. Most recently, it added Chipotle's Jack Hartung to the board. Are you any less critical of the board now? Do you think the board is doing its job?
No, I think there is no board. I think the board is Elon Musk. And so the board is just, it's like a weekend at Bernie's. It's like a bunch of bodies that they put at a desk and Elon tells them what to do and they do it. This Jack guy they just put on probably had no idea what he was getting himself into. And he's in deep now. So I don't actually think the board of directors cares about anybody but Elon Musk. And I think investors in Tesla know that at this point. And that's why we're ultimately sellers, is nobody actually represents retail investors, which still own 87% of Tesla. So it's really a unique situation. And I expect Tesla to buy XAI at some point for probably $200 billion, some outrageous price. And I think that's the next thing that will happen. So, there's no question that the merging of these businesses seems to be on the horizon.
Hey, before you go, I definitely want you to have you weigh in, Ross, on what President Trump put out on social, that he denied he was seeking to ruin Elon Musk's business empire as retribution for the dispute over the president's signature tax law. What's your read on this? Might this be helpful to Elon and Tesla? We just got about a minute 10.
No, Trump's just being the bigger man here and trying to, act like he doesn't have a tiff with Elon, because he's so mature or something. But the truth of the matter is he's already done what needs to be done to destroy Tesla by taking away all the subsidies and making EVs much more expensive. And so, he doesn't have to say anything anymore. Elon's dug his own grave, and he's going to have to figure out a way out of it. So Trump doesn't have any reason to look bad or grind an axe, and Trump's playing Elon like he has the whole time.
30 seconds. We have talked with you about your Cybertruck. We talked about others, that you have owned. Would you buy another Tesla? Do you still like the cars? Just quickly.
I do. This is the whole issue. I've looked at so many other cars to buy, and I want an electric car, and I want a great electric car, and I still think Tesla makes the best cars. And Rivian, I have a Rivian too, so I think they're a close second, and they make a great vehicle as well. But I just haven't been compelled by any of the other vehicles, EV vehicles out there. And so, I still kind of like my Cybertruck, and
I know.
I can't sell it anyways, but Tesla makes great vehicles, and it's a great time to buy an EV before the discounts go away.
Ross Gerber, you're incredible. Of Gerber Kawasaki Wealth. We so appreciate it. Coming up next, we talk Alphabet.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index pushing higher. We are close to session highs, up another 19 points at a record right now. The S&P at 63.78, showing a gain of 0.3%. Very different story for the Dow. Down 177, drop there of 0.4%. Certainly shares of IBM down 7.5%, weighing on the Dow Industrials. Nasdaq up 84. That is a gain of just about 0.4%. Bottom line here, tech shares leading gains in the S&P, with the gauge extending its surge from April lows. Meanwhile, J.P. Morgan Chase's trading desk expects the furious rally in equities to keep going. 10-year 4.40%, the 2-year 3.91%. Spot gold down $18 the ounce, 33.69, down 0.5%. West Texas Intermediate crude up 0.8%. WTI 65.78 a barrel. Bitcoin up 1.2%, $119,300 on Bitcoin. Tough day for a lot of airline stocks after earnings. American Airlines down 8.5%, Alaska down 3.3%, Southwest Airlines particularly hard hit, down now by 11.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, shares of Alphabet, they are higher today off their best levels. They were up as much as 4% right now, a gain of just shy of 2%. The Mag 7 stock that has been one of the largest market caps out there said demand for AI products boosted quarterly sales and now requires an extreme increase in capital spending. So heightening pressure on the company to justify the cost of keeping up, Tim, in the AI race.
We're delighted to have with someone who's closely followed for her coverage of the media, entertainment, and internet space. With us from Los Angeles, Laura Martin, senior analyst over at Needham Company. I want to start with Alphabet, where we're going to talk about a lot with you over the next few minutes. You've got a buy rating on the stock at $220 a share, price target trading at $193 as we speak. It bounced around after market yesterday. It's gaining today. What's important to you from this latest quarterly update?
The single most important number to offset the bears is the search number. So search revenue up 12% was well above the whisper number of 10% growth and above the Wall Street consensus number of 9% growth. And they also had 4% click volume, which basically is the same as last year. And that's up from 2% click-through rate in the first quarter, which is positive because the bear case here is that generative AI answers lower than the economics of Google search, which is the big money engine here. So the single most important number was that search grew ad revenue 12%, which was 300 basis points above consensus view. The second most important number is cloud, right? They're still out of capacity with cloud, but their cloud business grew 32% at a 20% margin. So that's fantastic. So they're really pricing up now that they have capacity constraints. And the third most important number is YouTube. YouTube grew 13% of revenue, and we think it's worth $73 a share here if it was separately tradable and not confined within the Alphabet conglomerate. So, but I would say those are the three most important segments that people are talking about. But the bear case really is highly focused on the search revenue growth.
And that's exactly where I want to go right now. Going into this print, there was so much concern about the cannibalization of traditional Google search. Why aren't we seeing that?
So what they're saying is that what happens when you have those answers, when you put in a Google search and then you get an answer, is that people are spending 10 times more time, 10% more time asking the next question, and that the shortfall in clicks per query is made up by the fact that people spend 10% longer, which then lets Google serve more queries or more ads. So that's what they're saying, is that the demonetization is about equal. That's their words, about equal. But I think part of it is the extra time people spend using the answer format is offsetting the actual, the downdraft in the economics per query.
Hey, the extra spend, the up again CapEx, initially everyone was saying, well, that's why the stock traded down in the aftermarket. It made some folks, or at least some investors, it felt like, initially nervous. What is your take on that? I think our own Mandeep Singh was saying, well, listen, it sounds like they're getting the demand and they're spending to meet that demand.
Yeah, I mean, I would say that. I would say the other thing that's going on is that I think one of the reasons the stock was a little volatile is the operating income grew 14%, the top line grew 14%, 14%, and it sort of looked like there was minimal operating leverage. But what they told us on the call that was buried in the financial statements is those costs included $1.4 billion fine, legislative fine, regulatory fine. So if you subtract that just to look at costs, the most important point we would make that I think largely is being missed, it doesn't have to do with revenue, has to do with the fact that by integrating generative AI into every aspect of their business, they've got really accelerating revenue, which everyone's focused on, but their costs are going down. Okay, that's not fair. Their costs are just not going up as fast. There's a lot more operating leverage here if you exclude the fine. So I think that's why I think once they said there was this big fine in the costs, people realize that generative AI is really lowering or increasing the productivity here. And so the operating leverage is margin expansion is faster than people think at a time when revenue is also accelerating over consensus view.
One thing I loved in your research, and you put this right up top, Laura, is you said we like Google's strong strategic position as #1 in search, #1 in streaming, YouTube, #2 in mobile, Android, #3 in cloud, #1 in autonomous driving, Waymo, which Tim and I are both in love with. And you say LLMs make data more valuable and Google's data is best in class. Again, your view. Is Alphabet in many ways the one to beat? And why hasn't the stock been, I don't know, doing more this year?
You know, I think Google, so I would say their execution has been very haphazard. It's not. And Wall Street really prefers leaders that lead from the front, like Meta, like Mark Zuckerberg. We like, visible, clear, visionary leaders. And that's not what's going on here at Google. But, Google, sort of despite itself, really does have the human capital and culture and financial resources to fund what will be a retooling of American business, which is the generative AI backbone infrastructure that they're building. And they're leading by executing within they're showing what's possible by executing, implementing generative AI into everything they do, every product they have, and every cost center they have. So this is what's about to happen to America over the next decade, is companies that follow Google's lead will have increasing margins and accelerating revenue. And if you don't, which requires a cloud, by the way. You can't do this without cloud. If you don't, you will go out of business because, in my opinion, because the companies that use generative AI to increase productivity and margins and increase revenue will get higher multiples from Wall Street.
I know you said search,
cloud,
streaming, search, cloud, and YouTube are the three most important numbers, but we'd be remiss if we didn't ask you about Waymo and the expansion that the company said is coming in the, quote, near future. Here's what they said. Alphabet hopes to expand Waymo to all cities in the near future. How do you look at this as an analyst on this company's stock, as an analyst for the company, and material contribution?
So you guys love the service. You just said so. So I don't like it in this sense. That right now, I think the most strategy is what you say no to. And what Google should be saying no to is anything that isn't generative AI related, because this is a race and a war. And they are spending a fortune on generative AI. Good for them. But Waymo is another huge sunk cost or financial commitment. And I would like them to figure out a way to do Waymo. They are ahead. They are #1 in autonomous driving. I would like them to keep the data, because I think data in the real world plus the virtual world is worth more than either world standalone. So I like the data aspect of Waymo, but I do not like the capital commitments, which compete right now with the generative AI capital commitments.
What are the capital commitments? They haven't been totally clear about that. What do you view them as?
Well, they sit in other bets, and I think other bets I'm forgetting, but it like loses typically $3 to $5 billion a quarter. So it's like $20 billion a year. And a lot of that is Waymo and it's their healthcare initiatives. And so I just think that money, they just upped CapEx by $10 billion. I would like to see them take it out of other bets, but the primary other bet is Waymo. So I think they're unwilling to relinquish their pole position because now Tesla's coming after them. So I think, look, they are number one in all of these strategic segments because they get there early. And so they're early to Waymo. I just wish it wasn't as capital intensive. The losses weren't as big at a time when Google should be spending all of its focus and resources on generative AI.
Laura, we really, really, really like Waymo. I'm just going to tell you, really, I even close my eyes in a Waymo. That's how comfortable I felt.
Laura's in LA where they have Waymo.
I
We're
know,
in New York
she
where they don't have
knows.
Waymo yet,
I know.
So.
Hey, listen, we've got about 3 minutes left. There's so many different places we would love to go with you, but you pick, because we've got Apple reporting next week, Meta reporting next week, Amazon reporting next week, Disney in early August, Netflix already out, and then there's the late night wars. What's interesting to you right now that you think the Bloomberg audience and investors really need to be paying attention? And it can be something else beyond that.
Let's do Apple because it used to be the biggest company in the world. Now I guess NVIDIA is. But what I would say about Apple, we have a hold here on Apple, whereas we have a buy on Alphabet, Google. I think Apple is in a box because when you listen, for sure, when we hear Meta, who's spending hundreds of millions of dollars per person to create a super intelligence generative AI group. And yesterday, there was no sentence on the Google earnings call that didn't have AI in it. So, these companies are really talking. Amazon will also, because that's being run, Amazon now is being run by the AWS, founder, essentially. He talks a lot, generative AI, a lot. So the one that's not the same is Apple. And people really want to see what's happening with their generative AI strategy. And how is Apple either 16, iOS 16, iOS 17, iOS 18 going to keep up with Android, which is Google, who last night told us they're integrating generative AI tools into everything, including Android. So I do think there's a bigger threat to Apple's only business, which is its iPhone business. We think it's a single product company with upsells to other devices. We think the anchor tenant there is the iPhone. So we really want to hear how they think they can compete when they are saying nothing about generative AI. And they're spending $12 billion on CapEx, which is the same number at Apple for the last 3 years. When we just, every single quarter, we show up on the Amazon call, the Meta call, the Google call, they're raising CapEx by $10 billion at a time, every quarter.
30 seconds on Apple. Is Tim Cook the right leader to guide them through the AI era?
Oh, so harsh. I'm going to go with no, but so harsh. No, I don't think so. I think we need a wartime CEO. And I think Tim Cook is great at a lot of things, but I don't think he's not proven great at this technological disruption called generative AI.
Got someone else in mind that you think should lead it? 10 seconds.
It's an impossible job. So no, I have no idea in mind for who could replace him.
You rock. Come back soon. And I think you are coming back soon, which we're looking forward to already. Laura, be well. Laura Martin, senior analyst at Needham Company, knows this space like no other. So glad we could get some time. Coming up, we're talking to the CEO of the second largest bank in Florida. We're going to talk a little Wall Street South and more. That's coming up on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index trading at a record right now, up 1663.75 where we stand. That is an advance right now of 0.3% Dow. The Dow, different story, down 215 now, weighed down by IBM. We've got the Dow down 0.5%. IBM trading lower by 7.8%. Tech stocks rallying. NASDAQ up 76, up 0.4%. The NASDAQ 100 index also up 0.4%. 10-year 4.40% with a 2-year 3.91%. Gold down $14 the ounce, down 0.4%. And West Texas Intermediate crude up 1.3%, 66.07 a barrel. Briefly, shares in so-called meme stocks trading mixed. GoPro right now down 2.6%. Krispy Kreme down 0.1%. Beyond Meat plunging 11.3%, but Kohl Stores up 10.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stenovic, live here on Bloomberg Businessweek Daily. So bank stocks have definitely been on a tear this year. They're up 14% as a group year to date, up 40% from an early April low. Bloomberg's regional bank index also up about 7% year to date. Now, keep in mind, this is all happening as President Trump focuses on efforts to deregulate traditional finance and move crypto further into the mainstream. They are moves that some say may be laying the groundwork for a financial crisis or simply fixing bureaucratic overreach stemming, Tim, from the last one.
With a view on banking, everything from personal to international banking, real estate and mortgages, wealth management, and more. We've got Jorge Gonzalez with us, Vice Chairman and CEO of City National Bank of Florida. It's got $27 billion in assets under management. City National Bank of Florida, it's a wholly owned subsidiary, Carol, of Banco de Crédito e Inversiones, one of Chile's largest banks, and has offices in Brazil, Colombia, Mexico, and Peru.
He joins us in studio. Welcome, welcome. Great to have you here. Your bank has been in Florida for about 75 years. A lot has happened in that time. Miami is the biggest market for the bank. Talk to us about what your clients are telling you right now about the state of the economy in your hometown.
Oh, first of all, Carol, Tim, thanks for having me today. Listen, we are super blessed. We're super fortunate. We feel like we're at the enviable position to be able to be in an economy, the state of Florida, that continues to be super resilient, super diversified, and continues to experience a lot of growth. If you think about what's happened to Florida in the last 4 or 5 years, we've had significant GDP growth. We've had over 3.5 million new businesses start. Our unemployment's around 3.5%, significantly below the national average. And most importantly, what we've seen is a transformation of the migration into the state of Florida. So whereby in the past, before COVID, you'd see a lot of folks coming in internationally. What's starting to happen pre-COVID and then post-COVID was an acceleration of people coming from the Northeast, from the Midwest, and from California into the state, which has really helped transform the entire economy in Miami, South Florida, Orlando, and Tampa, really the entire state, because it's become significantly less transient. It's become people are starting businesses, raising families, building their futures, as opposed to being more people that were traveling to Florida and South Florida for entertainment, for vacation, or more transient investment. So
and forgive me, it's not just, and I love older people. I'm getting older, but I mean, it's not just a place where people go to retire. As you talk about, it's really become much more diversified. 100%.
The amount of working age people that have decided to uproot their families and their kids and move to Florida has really been phenomenal. In fact, at City National, I'd say probably 30 to 40% of our more recent senior leadership and executive hires have come from outside of Florida.
Right.
Prior to the pandemic, that would have been very challenging for us to accomplish. And today, it's really been a very strong pipeline of talent wanting to relocate to Florida.
Miami benefits from a lot of cross-border activity, particularly when it comes to Latin America, South America, countries within the region. When it comes to the Trump administration's immigration policies, is that having any material effect on economic activity in the region?
It's not. I mean, obviously, it's on the back of people's mind. I think everybody agrees that immigration is something that has to be done in an organized, legal framework, and I think that's what everybody is expecting to take place here over the next 2 or 3 years. But as of right now, we're not really seeing a lot of impact from that standpoint. But I'm sure
seriously,
it's on
not even
mind.
in the hospitality area.
Not yet. Okay. I mean, it's not something that is seeing any real impact. But, again, and I think that's probably due to the fact that there's so many industries that are experiencing so much growth, so much demand, so much, inflow of capital that's taking place. And really, at Citi, we've been on the forefront. As you mentioned earlier, we've been around for almost 75, 80 years. And we've grown this institution from $2 billion to $27 billion, one relationship at a time, one client at a time, and one banker at a time. And it really is a testament to our business model, which is very relationship-driven, very client-centric, and very people-driven, has really been very well received. What people probably don't know is the number of banks in Florida has decreased from 300 to less than 90 in the last 10, 15 years. So the number of banks that are really situated to be able to support small business individuals, international and domestic capital has really decreased significantly. Really puts us at the forefront in the epicenter of being able to continue to support that growth. So we're very excited about the future of Florida.
What would you describe about lending? Like, so many folks come in and say, man, we'd like to see rates a little bit lower, kind of juice in terms of the lending market. What can you give us some insight into what you are seeing? And you play in small business, real estate, you play in a lot of different sectors that give us some really great insight into the economy.
No doubt. And listen, I think the Federal Reserve has done a really good job of navigating some very difficult situations over the last 4 or 5 years. I think the economic data is starting to reflect the fact that there's probably a rate cut or two coming in the near future.
Even though your economy in Florida is doing really well.
It's doing well, but I think we would benefit from a rate cut. I know for a fact our clients would benefit from a rate cut. I think consumer and consumer credit would benefit from a rate cut. So those are all things that I think are geared up to even continue to be drivers to the, not just the Florida economy, but over the overall economy, which is something that, is around the corner. It's just a matter of time.
You mentioned the number of banks in the state has gone down over the last few years. It's not just Florida where we're seeing that. We're seeing consolidation and M&A happen within the industry. When it comes to M&A, for you, are acquisitions of interest to you right now?
Listen, we're always strategically looking for opportunities, but the reality is that our organic strategic business model has been so well received that we don't need M&A to continue the growth. All that growth I talked about from $2 billion to $27 billion, that's been organic. 95% of it has been. So our business model is really something that the market needs, wants, and continues to be kind of at the epicenter of everything we do. If an acquisition comes our way that makes sense strategically, we'll look at it. But the nice thing is, as a CEO, as a management team, and as our shareholders, it's not a necessity. It's more of a luxury.
What part of the business is growing the most?
Listen, we actually we're very diversified. So
right.
As you said earlier, we do a lot of real estate banking. We do a lot of small, middle, large corporate, private banking, international. We have a capital markets effort, and we have a wealth management platform. And across the board, we're seeing growth. Where we're seeing the most growth is in markets outside of our Miami market, because we've expanded, a lot more boots on the ground in Palm Beach, in Orlando, and Tampa, because those are also some of the best economic markets in the entire country. So our expansion and our market share is starting to grow and have significant traction in those geographies.
When your wealth managers are meeting with people who relocated to Florida, what are they hearing from the Northeast and from the United States and within the United States? What are you hearing from them, and what are they hearing from them as the reasons?
Well, the first thing we're seeing is people are not going back. There's been some rumors or some gossip that there's been a lot of relocation back to the Northeast, and I can tell you, I talk to hundreds of people every month, and nobody's really going back. The reason they're relocating is because of, I think, the pro-business environment in the state of Florida, obviously taxes, some people because of the weather, but really just the overall quality of life in Florida is something that people understood prior to COVID, and COVID really accelerated something that was already heading in that direction. So a lot of times people think that COVID was the only driver to this. It was really happening 2 or 3 years prior to COVID. COVID just accelerated that change. And really, my hat's off to state leadership and local, political leadership. They did a really nice job of being able to welcome all these people in a very positive way.
All right, George, really quickly, 30 seconds. I mean, every good manager, yep, you sound very optimistic. What's the one risk, though, that you kind of keep an eye on? Or potential risk, real quickly.
Listen, I think if rates stay too high for too long, that does worry me, particularly in a state like Florida, where real estate is a main driver of the economy.
Yeah.
So I think a lot of our real estate clients would like to see borrowing costs come down. So that's probably the one thing that worries me a little bit. But there's so many other factors that are kind of underlying to the economy that I feel really gung-ho about the economy for the next 5 or 10 years.
Definitely feel the optimism. George, thank you so much. Great to have you here. Jorge Gonzalez, Vice Chairman and CEO of City National Bank of Florida, joining us here in studio. When we come back, check on trading and stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the first hour of Bloomberg Businessweek Daily, and we are coming up on the last hour of trading. In the meantime, you are looking at some slight gains on the S&P 500, 0.2% to the upside. NASDAQ 100 just up about 1/3%. Dow Jones Industrial Average down about 0.5%. This ahead of some big earnings after the closing bell. I guess I would say among the biggest is really Intel, but a few others reporting as well.
Yeah, we're going to hear from Deckers, so we'll get a view on the consumer. We'll hear from Newmont Corp as well. And Carol,
yes,
there's going to be a little bit of beer too. Boston Beer Company, the parent company of Sam Adams, is reporting after the bell too.
A little bit of everything.
Yeah.
I'm Carol Massar along with Tim Stanovic. Let's get to some of the stocks on the move at this hour. Bloomberg News cross-asset reporter Emily Graffeo is in the house, and she's starting with one that we're talking about a lot today.
Yeah, I know you guys have probably talked about Tesla.
It's okay.
Many times today and also after the bell, but it's a big story because not only is it a massive company, but it's a really big stock move today. It's down 9%, biggest drop since June, wiping out about $90 billion in market cap.
That's
if
real.
These losses hold into the close. What it was really about was this warning from Musk that there's going to be hard times ahead for the company. But then when you actually look at the numbers, revenue is down 12% year over year, missed estimates, adjusted EPS missed. But again, typically investors kind of have looked at Tesla and they've looked at the promises that Musk has made on robo-taxis and AI, and sometimes they're able to overlook maybe a sales slump. This quarter, it was not the case. So we have a lot of kind of Wall Street people weighing in. I know you guys have interviewed some people that are long the stock and are kind of questioning now, how much longer do you hold on? It's interesting when you look at the year-to-date declines, it's down about 25% this year. If you look over the last 12 months, it's still up about 40%, which is actually outperforming the S&P 500 in that time frame. So depending on when you get in, you might still be up, but
this has been a volatile stock
it
for
really
a long
has
time.
been.
Like, a big move such as this, it's obviously big in the, what did you say, $90 billion?
In market cap,
market cap move today.
Just in a day.
But if you've been a long-term shareholder, you're used to the ups and downs of Tesla.
Well, that's what Ross Gerber said. He's who's been selling, but he said he's got some investors who bought the stock when it was $2 a share, and so they still kind of want to be in it because you just don't know. Well, there's also capital gains that they're worried about at this point. But anyway.
Yeah, I mean, people have a lot of thoughts about Tesla, so it definitely gets a lot of attention. But I think it's worthy just to look at the magnitude of this drop today.
United Health, why are you looking at this one?
So this stock is down. Right now, it's down about 4%. It's hitting its lowest level since May 16. There's been not a lot of positive headlines when it comes to United Health. Today, the health insurer said that it's responding to criminal and civil requests from the DOJ about its Medicare practices. Basically what they're doing, the news today is that they had confirmed reports of probes that had been surfacing over the last 2 years. They said they're cooperating with the company, but nevertheless, it's not really something investors want to deal with. And it's really just adding to the mounting troubles at the insurer. They had withdrawn their guidance, as we've seen a lot of companies do during this time of economic uncertainty.
It's been a rough year for them.
But yeah, they had replaced a top exec. So this is kind of just weighing on the stock even further.
Down 44% though, year to date. So
yes.
ouch.
Every one of your stocks that you brought us
is a decliner.
Is a decliner, and also like a decliner by quite a bit.
Why so negative, Emily?
What is going on, Emily?
I wanted to keep it exciting.
All right, well, you did with Chipotle. What's going on with Chipotle?
So I picked Chipotle because this was a pretty large move, and I know it's a company that obviously we're all familiar with. At least I am. I eat Chipotle probably a couple times a day. Not a couple times a day. Oh my gosh. A couple times a month. Right now it's down 14%. They cut their annual outlook for the second time this year. Apparently their honey chicken wasn't enough to offset a traffic slump. Again, I said I eat Chipotle. Not
4 times a day.
Apparently you don't eat the honey chicken?
I tried the honey chicken once.
I
personally did not like it.
Okay.
I thought it was like too much. Have you guys had that?
I haven't. I'm just thinking, do you need sweet chicken in a burrito?
Bowl already? Yeah. And then they also, they had a comparable sales decline of 4% in the quarter. Usually this is a company, right? Usually they're in a positive territory for that number. So that missed estimates, but also it's just not a good sign to see a sales decline. In an interview with Bloomberg, the CEO cited economic volatility weighing on lower income consumers, those people pulling back, and that being one reason why the sales were declining.
What does this mean? The company did cite a boost from a strong plan to lap brisket? To lap brisket? What the heck does that mean?
We're going to have to go into a Chipotle.
I love me some brisket, but I'm not in September. Lap brisket.
I don't know.
I'm not sure.
Folks,
I haven't had the brisket.
At Carol Massar at X, feel free to let me know what that means.
Send me burritos. Send Carol commentary.
What that means. All right, CMG though down. certainly in today's session, and it's down almost 25% year to date.
Yep, biggest intraday decline since March 2020.
You're amazing. Bloomberg News cross-asset reporter Emily Graffeo. For more conversations, our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, Tim, or anywhere you get your podcasts.
Hey, we got a great program coming up on Bloomberg Businessweek Daily. The fallout from the Microsoft SharePoint hack continues. We've got with us former Deputy Director of the CIA on all things cybersecurity. If you're sticking on TV, the close. That comes up next.